Welcome, everybody, to another week of Wealth Wisdom, where we're helping you build wealth and legacy.
Companies are like an organism trying to survive.
It's always a risk when you're investing in a company that's purely tied to someone's brand.
45% of Americans have gone into debt for a Disney trip. All right, welcome back to another episode of Wealth Wisdom. I think we're on episode 41. I'm your host, Justin Obi. I'm here with Bill Ryan and Eric Benz, principals and co-founders of Fox Hill Wealth Management. Today,
Hello.
we're asking the question, how are you guys doing?
Pretty good,
What's
man.
happening? Good.
Doing well. Yeah.
Well, today's episode, the big $1 million question is, what if the best investments of the next decade aren't even on your radar yet? We're talking about AI-powered energy demands, biotech breakthroughs. Futurist investing isn't about guessing; it's about the inevitable and seeing what happens, picking up on patterns, and being able to see the future from 10 years from now, five to 10 years out. So we're diving into what it means to be a futurist investor today. Really excited to get into this with you guys. First, let's hit some news. I don't know if it was a quiet week this week. What do you guys think? It was fairly active week. We have Apple, big announcement this week for Apple. But investors hated it. Bill, what happened with Apple this week?
What happened with Apple? I think they really. The problem with Apple right now is you've got all this AI movement, all these companies doing all these things with AI, and you hear nothing from them on that front.
Mhm.
And actually, everything they've ever done, kind of AI related, has just been a flop. So, from a company that, you think about Steve Jobs, you think about one of the great innovators this world has ever seen. Now they've become more of they're an operating company. Their products are still phenomenal. I shouldn't say that they have innovated in the senses that their products are second to none.
Yeah.
And I know tons of people, maybe some people are going to say they don't like Apple, they don't like Apple products. There's no customization or things along those lines.
I'm a big Apple fan,
That's
though.
fine. I'm going to say those people you're a geek and you don't. You focus on stuff that I feel is irrelevant in some cases. But I'm just teasing some of my friends out there who are huge Apple haters. I just think most people, right? They want something to work. They want to get right into it. They don't necessarily need the customization. Apple does a good enough job, right? Giving you what you need.
They certainly, I feel like everyone's got, you walk around the grocery store, everyone's got a pair of AirPods in their head. I've got them right now. We were just saying before the show how great they are. They announced AirPods 3 are going to have live translation in them, which is pretty cool. So, Eric, next time you're traveling to Portugal, you won't be able to, you'll just be able to speak English and everyone will be perfect.
Portuguese.
Yeah.
Yeah, they'll totally respect me. Yeah.
They announced this cool new iWatch, a new iPad, new razor thin iPhone, the titanium made iPhone, upgraded cameras. Watch can now, I feel like it's competing with Whoop. They can do sleep score, high blood pressure, also blood oxygen.
Blood level.
Yeah. Eric, are you buying the new
Which
watch?
I've been dying to know my blood oxygen level.
I'm an Android guy.
Oh, there you go. So
you didn't know that. Yeah, I've Googled Pixel and Pixel Buds.
There you go.
But I don't know. Yeah, Apple doesn't seem to be an innovator anymore. What they do is they tend to have the highest quality products, or when they introduce something, people actually adopt it. Like the AirPods, for instance, like the Bluetooth headphones were around for years and years. But when Apple introduced AirPods, then everyone suddenly got rid of all their wired headphones. Same thing with the watch space. Apple introduces stuff and just does a better job. And now you see everyone walking around with their Apple Watches. But they're never first to market anymore.
Yeah. So
their ecosystem and their everything seems to they just seem to everything seems to integrate very well.
I think that's what it is. It's a great brand. They've got a great moat. Yeah, and their stock fell 2% after the big conference. So we'll see what happens there. Keep an eye on them. but they're certainly lagging behind the big seven.
Just like I'm
All right,
lagging.
we've
Well,
got
I'm up against.
yeah.
Yeah, I was going to say,
There's
speaking of Eric, you may want to get some Apple headphones so that your sound doesn't sound like garbage as it does right now. As Justin and I are coming in clear as a cucumber, whereas
all
everything
right.
is saying.
So we'll
I don't know why
we'll
I said
keep
that, but
rocking.
yeah.
Hopefully he gets back in.
But yeah, I just
Markets
think one problem with Apple, they're priced right. They're priced very high. Their
premium.
price is a
Yep.
gross company. Their growth isn't very extensive. Their products are just upgrades of existing products. And I think people are looking
Yeah.
to see a little more innovation and integration with AI. The one aspect that they've had probably in large language models is the Siri. And it's without a doubt the worst voice system of almost anything you know what I mean, have, which is amazing with a company that has, multi-trillion dollar worth and more cash than it knows what to do with. It would be nice if they took some of that money that they've been doing share buybacks, and that's been responsible for a lot of its growth. It does pay a dividend and things like that. I would love to see them buy one of these AI firms, get it
Right.
integrated. I've heard a number of different things that they could be doing, and yeah, if they could hire one of those companies or buy one of those companies and get them integrated with their products, I
hmm
I think growth would come back tenfold. But they are the type of company who wants to there's so much cash being spent in that area. They're kind of letting everything unfold and then say, hey, partner with us and we'll take a fee, just like they took with Google for years,
Right.
right? Google paid them, I don't know how many billions of dollars, right? Was it 25 billion a
Well, they're
year?
still paying them. Yeah, that was a
Yeah,
court
but
case. And
they don't want to talk about, that's one thing in their latest thing. They don't want to talk about that stuff with everything going on. They don't want to talk about a company paying them for exclusive use in their products, because that's
that was the
one of the
news.
reasons it almost broke Google up. So Chrome almost had to get
Right.
sold. It finally got announced that it wasn't the case. But
Yeah, just last week. Yep.
yeah, so I think Tim Cook is
Because
treading
of
lightly.
Yeah, true. That was just because of OpenAI coming out and saying, "Hey, we're now competing on search with Google," and so that was actually a big win for Apple, just to be able to keep that
Yeah.
business.
And actually, if we look back in the episodes, we were talking about how Google has competition everywhere, and to say
That's
that
right.
they're a monopoly is just not the case. It's
I
they're
think we
being
talked about
attacked
that
from
about a
all
year ago.
angles. Yeah.
Yeah, yeah. We completely lost Eric now. We got to move through the
Yeah.
news, but like to your point, I just looked it up. Apple's got 55.372 billion on their balance sheet right now in cash. So you would think they would be leveraging that money into AI, just like Google is, Microsoft. So you're right. I think that's like probably the number one biggest thing on people's minds right now, and what's going on with that.
Yeah.
But I think if they can pull it off, they've got the moat, they've got the distribution, they've got the network already in place. So I'm not counting them out yet.
Mhm.
All right, and then this week, Bill, big news on the jobs front. I don't know I mean, crazy. So we had 22,000 jobs added, an abysmal report for August jobs. And
Yeah.
then on Tuesday, double whammy, right? You have Tuesday, they actually overstated jobs from the past, I think it was the past since March, by a million jobs. So they erased a million jobs with this new report came out Tuesday. And so markets are pricing in basically a guaranteed Fed rate cut next week. And sometimes some people are saying calling for 3 cuts, and it might be a mega cut at 50 basis points. What do you think is going to happen here? Were you surprised by the jobs report?
I think at this point I'm not really surprised by anything in terms of the job supports, but my only problem is I don't understand at this where we sit here on September 12th, 2025, how we
Yeah.
cannot collect data on jobs being added. To me, I feel like that is such a simple.
Yeah. And You're not
thing
alone.
to
A lot of
gather.
people are
I don't
criticizing.
understand how this happens at this stage in the game. That's one thing that I want to say. I think that's absolutely ridiculous. But the fact that, yeah, almost a million jobs, right? $900,000 jobs in revisions, that is,
Yeah, 900,000 fewer jobs. Yes.
yeah.
Crazy.
But again, uncertainty with tariffs, uncertainty with rates, you know what I mean?
Yep.
All these things that are going on that's hard for companies to add during time periods like that. Now that
Yeah.
stuff has become a little bit more clearer, I think then with these rate cuts coming, do I think that it's going to be three? I don't. I think we'll probably see two throughout the year, whether there's a 50 and a 25 point or two 25-point basis cuts. We'll have to see.
Yeah.
Inflation has been a little sticky, so that definitely still plays a role. But
But the Fed's
with
got that dual mandate. We've got jobs and inflation. And so this is harkening back to 2008 levels for jobs right now. Like there are more people unemployed than there are jobs available. And so I'm putting out there, I think it's going to be a 50 basis point cut. That's my bet. We'll see.
it would spur a lot of things, right? You got a lot of small companies, right? Small cap companies that are struggling due to interest,
Yeah.
and obviously real estate. That whole sector has been spitting along. That
Yeah.
would be very positively affected. Banking would be, especially maybe not the big banks, but those mid market banks that are really reliant on refinancing and all the business that comes from that.
Yeah.
And it would probably promote some all these people who've been sitting on their low interest loans, right? They're, hey, I refinanced during the pandemic at 2.5, at 2.75, at
Hmm.
3%, whatever it was, if they got it. I can't sell. I can't sell now. It
Right. They're
doesn't even
locked
make
in.
sense. Or even those people who are looking to downgrade, right? They're
Sure.
older, they've been in their family home, and they say, hey, we want to simplify things. I want to go into the small single family, the small condo, things like that. I do need to get a mortgage, but I don't want to do it at today's things. I don't want to be paying more. I'm in my house and I'm paying, you know, I don't know how
Right.
much money a month, right? I'm paying $1,600 a month. It's cheaper than renting, and if I try to get a new mortgage, I'm going to be paying so much more, right? So I'm going to stay in my house,
Yeah.
even though I know it's too big and I don't need it. I don't need all the space. And so
Yeah. No, you
it'll
can't blame them.
loosen up the markets. So it'll be a big thing. So I do think it would spur a lot of different industries in that
Yeah.
sense.
Yeah, I agree. Yeah. I don't know if Eric, you're back. It looks like you're back with us.
Nope,
Maybe not.
technical difficulties still on
Still.
Eric Benz.
Yeah. All right.
Eric's
The
in a new
last,
house. He's got crappy internet. We're not gonna we're not gonna fault him.
no,
Um,
no. So he's got a lot going on right now. So the last bit of news I pulled for the show, which was we've talked about this before, Bill, on the show, just how much it's like AI eating the world right now. You've got AI coming in and eating all the energy. They're saying that it'll take up 10% of the US energy right now. AI will take up that. But Eric Schmidt,
as we stand today, in September of 2025, it's going to use up 10% of the.
no, by 2028, AI use will account for 12% of total US consumption.
Okay.
So Eric Schmidt comes out recently warning Congress that 99% of all electricity will be used for super intelligent AI, which is where we're headed. So he's thinking that's a 2030 thing. So in 5 years, AI, and think about it, makes
This is
sense.
the former CEO of Google, Eric Schmidt. Okay.
Yes. Yes, exactly. And so he has been warning Congress saying, hey, we need to, if we're going to win the AI war, the race, energy is pivotal. It is at the center of this. And to make so just
Are you pushing for clean coal right now?
clean
Is that
coal.
your
Yeah, no,
pitch?
he's
No, I'm just kidding.
no, it's just energy in all forms because it is such a we're so far behind. The US needs another 92 gigawatts of power to support AI, which is equal to building 92 new nuclear power stations. And for context, only 2 have been built in the last 30 years.
Yeah, but a number of them that have closed that are bringing back,
Yeah.
right? So they don't
And
even
that's
need to necessarily.
why, yeah, we did the show on the 3 Mile Island, I think about a year ago, where Microsoft was investing and bringing that back online.
Hmm.
But as we talk about the show, like the main segment is investing like a futurist. As AI eats the world and continues to grow, I thought that was really important to showcase. And I want you to bring that up as we dive into the main segment right now is how do you see AI? Do you believe, first of all, do you believe AI is like the big wave right now? And then how do you see all the ancillary pieces forming around that? I know we have a lot of holdings and we
No,
talk
it's. I
about it
mean,
fairly often.
it is a. Yeah, it's obviously a life-changing technology. It's going to allow us as humans to do the work of what we do right now
Yeah.
by thousands. I really do believe that. I think people who can really take advantage of it, they're going to be able to multiply their workload
Mhm.
exponentially, which then makes companies leaner and more profitable. As their profits increase, their stock, you know what I mean, increases, right? With that, I percent think that that's happening.
And
The
you saw it with
jobs that are
Oracle
going to
too.
come out of it, again, we don't even know what jobs are in 10 years. There's going to be, or 5 years from now, there's going to be jobs that we couldn't even think of
Yeah.
are going to be commonplace. And yeah, I really think there's going to be the amount of job creation. It's going to destroy a lot of industries, just like every new technology has throughout history. Whether you look at through the
Hmm.
Industrial Revolution, all the way up until now, every time there's new technologies are introduced, it disrupts certain things, and then more stuff comes out of it than it disrupted.
Yeah.
Right?
Yeah.
We'll lose 100 jobs in one area, we'll make 1,000 in another. And I do think that's going to be the case. Um, in terms of the
Right.
energy, though, I'm going to go back to utility stocks, which if anyone who knows me, I'm a huge believer in utilizing them, especially instead of or in contrast with fixed income, things along those lines. I'm a big believer in using utility stocks for maybe what I consider a little slightly more risk, but exponentially higher returns over
Hmm.
time that allow you to get cash flow from the income of their dividends, but also keep up and beat inflation throughout your retirement, which I think is huge. You don't want to be living like a pauper 15
Yeah.
years into retirement because you said,
That-
hey, I took all my risk off the table and I'm in these fixed income investments. And then we have a year like 2022 and 23 where we have this runaway inflation and your investments can't keep up and you're spending
Right.
down your principal, and then guess what, your interest is now becoming less each time. We want something that's going to beat inflation, and then, or not just beat inflation, excuse me, not just keep up with inflation, we want it to beat it, right, and add to your portfolio's value. But yeah,
Right. Completely.
they will be adding, we'll see, in the nuclear space, you'll see stuff will be added. There, excuse me, not stuff. There will be new plants and things along that being added.
Yeah.
There's no doubt in my mind, and it
They're already
fueled a
building
lot.
some of these data centers. I just heard for example, there's a data center being built in Al something,
Virginia,
Texas.
or
No, in
okay, yeah.
Texas. These are like 1,100-acre farms. They're massive, like huge, huge, unfathomable to how big these are, and they're taking up all of a lot of electricity. The also water is a big piece. But so as they need to
What,
build
from
this
a cooling
infrastructure,
perspective and things like that?
exactly, yeah.
Hmm.
So the
Yeah,
water
it
water
obviously has.
demands,
As you've seen over the last few years, their grid situation is not exactly. They have a lot of issues there, right? When they had storms and
yeah,
things like that, and trying to get things online, that caused a huge issue. Actually, one of our holdings, Vistra Energy, which has done phenomenal for us and our clients over the past several years, they benefited a lot, right, from some of the issues that were going on in Texas.
yep,
But
yep.
yeah, it
Here,
is
here,
interesting.
just pulled it up. It's crazy. So the Stargate project is happening in Texas. That's a $500 billion AI driven data center. The data center in Laredo is 50,000 acres. 50,000 acres. That's how
That
big
doesn't
it
even
is.
seem real. Like a number
Right. I
like that,
know. Massive, massive.
50,000 acres. This is a building.
It's yeah,
I'm gonna
it's
fact check you on that one.
it's wild.
It's on Google. Now, that just seems way too big. I don't know.
It's big.
50,000.
Yeah, it's big. Yeah, check it out. It's crazy. And I don't think they're made of one building. They're really AI data cities that are being put up. And there's not just one. It is pretty wild to see. And that might be a lot of them. So clustered together. It's massive. I think it's perfect for the topic of investing, how to invest like a futurist. So let's just run for the show purpose. AI is the future, right? Let's just make that assumption. And again, if you're listening, this is all for
Going out on a limb there.
this is going out on a limb. This is educational. This is for entertainment purposes only. This is not investment advice. Consult with an advisor, please. I think investing like a futurist is deciding, all right, where's the world going? What's going to be affected by that? And thinking of like in systems and patterns, like how diversify across different time horizons, and then watching if AI, for example, if we were to say yes, that's where our belief, that's the thesis that it will eat the world, what benefits from that? Like you've mentioned utility stocks quite a bit because they're like the bones of it. What and I thought this was a perfect show for you
Yeah, I
because I
don't.
feel
That
like you
whole
do
like
this.
invest like a futurist. Like that term I don't really like that.
You
That's
don't like the
when
marketing
you're
term I
doing
picked?
any investing. What are you doing? You're picking companies that you
Of
are
course.
going to
It's
grow
always for
earnings
future.
in the future. So at any point in time, if you do any investment, you're not thinking, hey,
It was just a
you
good
obviously
hook.
want to invest in companies whose earnings look to increase in the future. Whether so, investing as in itself is
I knew you were
a
going to call me
futurist
on that.
concept.
I knew you were
Yeah,
going to
well,
call me
you
on that
love your little
because
like
hey, it's
buzzwords.
a good hook.
You're in
That's what gets the
marketing,
people
and
to
you love
listen.
you love your marketing. I don't
All
know.
right.
I'll
So
call
tell
it.
me, talk to
I'll
me.
call your
How are you?
marketing BS. That's what I'll call it sometime. Whatever things.
All right. So talk to me about how you're thinking about
And
AI
I'm
right now.
teasing you, but
How
no.
how does AI like just if people are at home, they want to learn about investing for the future. How should they be thinking about AI? Just walk us through your thoughts on how you invest. Just in general terms, not
Yeah, no, in
detailly.
general. So if we think about it just from, okay, let's start with the build out of AI, right? We know
Yep.
that some companies obviously are currently using AI for their business model and deriving a profit from it, right? So for example, company like ChatGPT, it's a subscription. You can use them for free in some cases, but then there is subscription based fees that you could be paying to
Right.
use different performances from them. Okay. But they have a build out that they need to in order to improve their systems, right? So
Yep.
that will
Yep.
lure more customers who will be paying more money, whether it's individuals, solopreneurs, or big companies and things along those lines, right?
Yeah.
In
Yep.
order to do that, they have to spend money on their data centers, right? Because all this stuff comes from taking huge swaths of data and
Mhm.
applying it to their product, right?
Yep.
So whether you're trying to make a marketing for something and you can go in and you can say, hey, I want to have, as part of this marketing thing, I want someone walking through New York City on a sunny day, and it creates that video for you, right? Something along
Mhm.
those lines, but it needs that data. It needs all those data points in order to then spit out the product for you. So they have
Yep.
these huge data centers. And with that, there's a ton of companies that are doing the build out for
So
it.
who are the company you're thinking like who are the companies that are going to provide the basic the nuts and bolts of AI?
Yeah. So that's one aspect of it. And that's one
Okay.
theme that we've been utilizing at Fox Hill. Not just thinking like, hey, Google, Meta,
Right.
Microsoft, companies that have those products, but they're then taking their profits in from other business ventures, right? And then they're putting it into AI. They're investing in AI themselves. But part of that is, right, they need to build out those data centers. Okay, so what companies are selling them their switches, their systems, their AI, like you said too, takes up
The
a lot of power,
wiring.
right?
Yep.
Takes up a lot of power. These things can't overheat. You don't want to burn out these chips, right, from NVIDIA,
Hmm.
things along those lines. You're spending all this money on these server racks, things like that. So how are you cooling, right?
Right.
What systems do you have in place to keep these products cool?
Yeah.
Everything that kind of goes into that data center build out. So from, like you said, all the so whether we've talked
The
about in the
switches, the
past, a company
wiring.
like Amphenol, like
Hmm.
Arista Networks, you've got companies like Cisco Systems. There's so many things that go into that.
Yeah.
Then when you have other companies too, you think about all, just like the good guys are making these things, there's a lot of bad players, right, in it. So they're utilizing AI to have attacks and things like that. So now, okay, now internet security companies,
Mm.
companies like CrowdStrike, things like that, and they're utilizing AI to help put out some of those
Those fires.
issues.
Yeah.
So,
That's it. Yeah. Interesting. I didn't even think about that for
and
sure.
then when you think about utilities, how do you power these things? This major demand, right? I don't know what our energy consumption has been very steady, right? I think maybe for the last, prior to all this, right? So let's take us back two,
Yeah.
3 years, right? Before AI really hit the scene. Our consumption of energy had been very stable. I want to say for about a good 15 years, or maybe even further back than that. We really hadn't seen a big uptick in our energy consumption. So utilities had been steady in the sense that, yeah, your town might be building a few more commercial properties. Residences have gone in, right, and empty lots and things like that. And so there's been a demand
Hmm.
uptick in that sense. But now we're seeing not only that going on, but then you couple the fact with these data centers using major
Huge spike.
major amounts, right? Now we're
Huge
seeing
spike.
huge, yeah. So we've seen, as everyone I'm
Yeah.
sure has seen in their utility bill, it's gone up significantly in
Looks like
terms
it's
of what,
doubled.
what we have to pay due to demand, right? Go back to your
Yep.
basic macroeconomic course, right? There's a certain supply and there's a demand. If that demand goes up and supply does not go up, the cost goes up, right? So,
Absolutely. Yeah. And a lot of the states who said, hey, we're curbing these natural gas, we're curbing fracking, whatever, are now they don't have enough energy very quickly. And so residents in the news a lot. I think in Massachusetts, it's one of them where my energy bill doubled over the
mhm.
past couple of years. So it's real. I think you've got people like the fellows, our good friends over at the All In Pod. They talk about this a lot. How can you get energy down to almost zero, right? They need that. You need that cheap energy to fuel the future, which is great. So I think like how do you think of diversification as we go start to think about investing for the future for AI? Are you playing offense and defense in a lot of your thinking?
I think in any portfolio construction and in any investing, there's trends, but there's also areas of the market always catch up, right? Return to the median or medium or whatever we want to call it. There's going to be outperformance in certain areas, and then companies that are disregarded by the market,
Yeah.
they will too have their day, right? So there are times when maybe consumer staple stocks maybe
Hmm.
aren't doing as well. But then there's going to be times they will outperform technology, right? Even if it's boring and things along those lines. The companies that seem to do well, though, they embrace the technology aspect of it into their business. So they might be deemed a consumer staple stock, but at the same time, they're using technology to serve their customers better and get their
Mm,
product out to people faster, more efficiently, and maybe tacking in some type of service charge and things like that due to that convenience. You
yeah.
might go back 10 years ago with a company like Costco, and um, at that time, how would you go to Costco? Hey, you go to the brick and mortar store, you get a good deal, right? You load up, get the car all packed up, and come back to your house and unload. I can remember going to, when I was in
Oh, yeah.
college, me and my roommates, we'd all go, we do a Costco run, right? The four of us would boom, 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 pick up everything that we needed. We'd come back, we'd eat like a king. But that's how you did it, right? Now you have a company now, so like you're embracing like Instacart, right?
Yep.
I don't have the time, so maybe I want to pick up some food snacks for the office and things along those lines. Now it's like, all right, I don't have time necessarily out of my day, or my day is better spent speaking with clients and providing them with service. I'm going to make more money that way than I am going to be taking time to go to Costco,
For
spending
sure.
that 2 hours picking out my stuff. I don't necessarily know the store as well. Someone from Instacart does know the store very well, so they're in and out of there picking what they need. You go in, they then deliver it for you. I've been able to spend, let's say, two hours more working. That person
Yep.
can do it due to scale, right? They can do it for a lot of different people. It makes it a profitable business. They charge me a fee for that, but I'm able to make money on that delta from what I'm doing. And
So you're talking about
so
like
you
how
think
you're
of
playing.
Costco as a boring company, right? But then
Yeah.
when they start taking technology into it, now all of a
Mhm.
sudden that opens up a whole other area where they can make money. And they're probably going to be with AI and utilizing that within their business.
Mhm.
That will probably help them in terms of efficiencies of
Yeah.
how they're buying right from their suppliers. Are they going to notice cost efficiencies that will allow them to? One thing about Costco, right? They make a lot of money on their membership fees, and then they have very, very low margins on their actual goods, right? But if they're able to pick up a few percent in margin, right, just because
Massive.
utilizing their data and bargaining, right, their unbelievable ability to bargain with their vendors, right, to get that rock bottom pricing, right, for their
Yep.
customers, that could be a huge win. So you can see it across, and think about how Home Depot or Lowe's or all these other companies, you don't think of them as an AI company, but they're going to start using AI
Mhm.
in their data and collection and use of that data to make them significantly more profitable, right? So
Right.
it's going to hit across all industries. So I don't want to, but what you need to think is which companies can take advantage of that.
Yeah.
And
Yeah.
I think that's a
And so
big,
you're talking
big thing
about
to think
playing
about.
offense and defense at the same time, like hedging across different industries and different sectors
Yeah.
into the future. No, I love that.
Yeah.
That's
But if
great.
all, if the company is not thinking that way on how
Mhm.
they can be doing those things, they'll get left behind by a competitor, right? Because every time you see a company do really well, have high margins, things like that, that's going to cause competition to come into that space, and
Mhm.
margins will come down. And if someone else is doing it better, then they're going to offer better pricing. That's going to cause consumers, companies to buy from that company.
Yeah.
And so all companies need to be doing these things. And when I think like a futurist per se, I want companies that are smart enough to take advantage of those things so that their core business again then becomes more profitable. They can sell to
Mhm.
more people or companies, make more money. And
Okay.
as they
Yeah.
make more money, their stock price goes up. For the most part,
Of
that's what you
course.
see.
Yeah.
So
So I think obviously a lot of people are listening. Retail investors are investing more than ever before. Part of what they're using to leverage or to make those investments in trades is Robinhood. And that's our weekly stock pick coverage of the week. We wanted to share with you guys who are listening
mm,
still. We just purchased Robinhood this past Thursday, the 4th, which was pretty pretty fortuitous timing, I would say, because the next day, they were welcomed into the S&P 500. So it's currently up 15% for us. Bill, what were your thoughts? I know you pushed heavy in the investment committee meetings about for Robinhood, I believe.
I've been pushing for Robinhood for a long time.
Yeah.
Begrudgingly, I probably should have put my foot down a little earlier.
So that's why we have the investment committee.
Because we did miss out on some significant gains even prior
Mhm.
to that, and some of the reasons why I liked Robinhood for a number of different reasons. It's funny, it's interesting, right? Where as a custodian, right, of where you keep your assets, you got a number of different options out there. As a firm, right, we use Charles Schwab.
Yeah.
Robinhood, Charles Schwab is a good mix of retail investors, right? You can start an account there. They acquired TD Ameritrade, right, recently within the last few years.
Hmm.
Advisors use the platform, right? So you've got a lot of different registered investment advisors or other firms who hold custody of their funds at Schwab. Robinhood primarily up to this point has been a retail, right? So you want to get in, you're 23 years old, you want to get into the stock market, you like a stock, you want to go in and buy that stock. Robinhood has been a real innovator in the industry. They were one of the first firms to say, hey, we're not going to charge you. It used to be, hey, you want to buy a stock? It's $4.95 for a trade. It's $6.95 to make a trade. It's whatever it is. Robinhood was one of the first companies to say, we're not charging on equity trades. So you can trade as much as you want. They would gain their fee between the bid and the ask price of the stock. But that's how
Okay.
they would make money
Mm-hmm.
initially.
Yep.
So that's, I guess, they've been a real innovator in the custodian space. Okay, that was one aspect of it. They keep coming out with new products. They're not afraid to go really anywhere. So they're getting to the point where you can do and you
Anything.
can
I
buy
think you can make
anything.
bets on there,
Yes,
right?
getting into that space.
Yeah.
So they can do those things. You can buy crypto, which right now, crypto is, because of how thinly traded it is, there's a huge spread on what people pay, what they get it for, and what they can then sell it to you for. So it's incredibly profitable
Hmm.
for these companies. Now, as more companies get into it, more custodians get into it, that spread will decrease, right? So the increased competition will bring that down. But right now, it's
Sure.
pretty
Very
significant.
profitable. Yeah. It's 20% or something of their total business is crypto.
Hmm.
And it used to
But
be much more. And now you can, you can gamble on real world outcomes through their partnership with the prediction market Kalshi. So they're
yeah,
getting everything, just like you said.
Yeah, so it's almost like anything that I want to say, quote unquote, deem as an investment, right? Some people,
Yeah.
but yeah, so you can do anything from traditional investments, right, to the other end of the spectrum, like you said, these um, bets per
Yeah.
se. They do everything a traditional custodian does. They have securities lending, right? So if you want to buy stuff on margin, you can they'll loan you money at an interest rate, just like you can at Fidelity or Schwab or anything like that. They're also making money in subscription fees where they'll offer you a platinum service. You may
To reduce
be
your trading fees, right? I think.
no, not for trading fees, but you get maybe better bet. They might like stuff more along the lines of quicker deposits, right? They might
Oh,
verify
sure.
your assets
Okay.
real quick. You might get a little bit better interest rates on your margins, give you a
Okay.
little higher interest rates, right, on your cash that's sitting in the account. Like little things, right? Maybe some better data, better research and stuff like that they'll unlock for you on their platform. But
Okay.
that's,
Yeah.
things along those lines. So that's an interesting thing. And one thing they've gotten into recently is that they want to break into the advisor space as well. So they recently acquired a company because if you think about it this way too, right? Robinhood started within the last decade or so. And at that time, like I said, you have a lot of 20-year-olds who are buying and selling stocks and they're maybe
Yeah.
rolling over their 401ks, right? They've left a few jobs and they were doing it on their own, right? But now, say that person who's been with them the whole time is now they're 37 years old and they have
Their customers are
one
maturing.
kid,
Yeah.
two kids, right? One on the way or something like that. They bought a house. Their job has become a lot more busy, right? They went from an entry level worker to maybe into some type of management role. It's more
Mm-hmm.
time demanding. They don't have the time to buy and sell stocks or worry about the asset allocation of their portfolio. So now they're starting to utilize those services, right? So Robinhood now wants to to kind of get into that space where they can now have advisors help doing managing money and things along those lines. So
Very interesting.
what I really like about them is that they're very innovative within the custodial space. They're every time and anything they can make money on, they're developing a product for that.
Yeah.
So that's important to me. Hey, talking about thinking of the future, right? They're
very future
yeah, they're
oriented.
doing that. And then now when you get into utilizing crypto, now the tokenization of assets and things along those lines, they're going to be on the forefront of things like that.
Yeah.
Right.
Oh,
and
yeah.
then
No,
and they
they're
have
very
and they have the
progressive
user
company.
base, most importantly, right? They have that younger 20 and 30-year-old user base who are going to be quick to adapt to that. I don't think a 60-year-old is going to be an early adapter in the tokenization of assets. You know what I mean? They're going to say, no. I don't even know. Token? Like,
What does that mean?
do you mean like a T
No, for
token?
sure.
I don't understand what you're talking about. You
No,
know, so
and to your point, they've got a great user base, really strong brand recognition. They've got a good moat. If you're in there, you're buying their membership program. It's unlikely you're leaving, or
Mhm.
you're not leaving, Robin. You're probably maybe you add a Schwab to your overall investment portfolio, but that's it. Like I totally agree with you, and they're very future oriented. No, it's great.
Yeah, so that's the
Solid.
thing. That's where and I also too. This may not have to. Eric would probably talk about this if he was on here. But
Yeah.
volatility in a firm like that, when volatility hits, which seems, I don't know. I'm trying to think. Looking back, is it more common now? Right? Do we have these huge swings in the market, up and down, things like that? But during those times, there's a ton of trading going on. And there's a ton of retail trading going on during those times, right? Because everyone wants to catch the wave. When that happens, Robinhood makes a ton of money.
Absolutely.
So I feel like that's happening more and more. But yeah, I just feel like they're a huge growth stock. Like I said, making a lot of different products, things like that, getting into a lot of different spaces. That they're making what I'll say is all the right moves right now, and that's something I've been kind of hammering the table for. We had an opportunity to add them recently. Again, timing can be everything in life, right? And we did get it. We did purchase it for our clients before being entered into the S&P 500, which was nice because we immediately saw a good bump, and now we're up, I don't know, 18% or something like even more. I think.
Is it more? Yeah.
Because
No, it's a great move, and I think that's the power of the investment committee is just watching, having an inside seat in that. It's not just one person willy nilly making those decisions. You got a whole team acting like devil's advocate and pushing people to really discuss and prove why they believe in it so much. So it's been great.
Yep, that is.
Yeah, but that's it. That's the show.
Some of the fingering area. Yeah. All
That's
right.
the show. Yeah, if you're still listening, thank you for listening. As always, be a friend, share with a friend if you think this is valuable. That's how we grow the show and how we're able to bring this to you every week. So, coming live from Fox Hill Wealth Studios. We'll see you guys next week.
AKA our laptops.
We'll see you guys next week.
All right. Do good, be good. Bye.